We can't hide it. Here at VisualPolitik, we love Asia, and that's partly because we believe that the world's center is already on this continent. But in the last few decades, one country has stood out of that crowd, and that country, well, it's China. For its huge size and the speed at which this country is growing, China deserves to be given the chief role in this superproduction that is changing our planet. But wait just a second, let's not rush into this whole thing. China, it's certainly not perfect. Indeed, the country has some pretty major problems.
On the 23rd of May 2017, Moody's, one of the three agencies in charge of rating the solvency and risk of financial products, downgraded the rating of China's debt.
And this is the first reduction Moody's has made on China's debt in 27 years. Yep, okay, now I know what you're thinking. Moody's, really? Rating agencies in general? I mean, they rarely seem to get it right. And yeah, while that is true, it is also one of the only things that we have to judge this sort of thing.
Investors still overwhelmingly rely on Standard & Poor's, Moody's, and Fitch when deciding whether to buy bonds. The three issue more than 95% of global bond ratings.
The thing is, dear viewers, China has faced two major threats in the last few years: less growth and much more debt. In fact, this has even led to an important question: can China go bankrupt?
China's great growth.
If we had a time machine and the opportunity to travel back to Mao's China, the country we would find would be completely different to the one that we find today. There wouldn't be any skyscrapers, any malls. In fact, there really wouldn't be much of anything. In the 1970s, China was a mainly agricultural country, and it was extremely poor. But a few years after Mao had died, a man known as Deng Xiaoping came to power, and he realized that communism, well, it really hadn't worked at all. He immediately put into practice a set of measures that would change China forever. These reforms and the change that China has gone through since are actually going to be the subject of an upcoming VisualPolitik video, so please don't forget to subscribe to this channel right now. Alright, done that? Well, let's carry on. For now, it's important to remember something. Deng Xiaoping was a turning point for China.
Since then, China has undergone the greatest economical revolution in the history of mankind. In the last 3 decades, China has managed to take 500 million people out of poverty and to become the largest industrial and trading power on the planet.
In other words, if we ask any Chinese person about his or her living standards, the answer will be that now is infinitely better than it was before. And please don't get me wrong, there is still a lot of poverty in China, but compared to how it was, it's a whole lot better today. But as I was saying earlier, it's certainly not all roses, and there are some serious clouds on the horizon.
A system addicted to debt.
Have a quick look at this chart, which shows what happens to Chinese debt in the last few years. As you can see, it goes up and up and up, and I mean, well, that's a seriously steep line. On the other hand, look closely at what has happened to Chinese economic growth. As you can see, well, this chart, it's headed in the opposite direction. So, in other words, in China, the economy is declining and the debt won't stop rising. Look, in gross terms, the Chinese debt has multiplied by 4 since 2007.
The Chinese debt now equals more than 260% of the GDP, and many analysts consider this number to be especially high for a country that is yet to become one of the richest in the world.
Well, most of the debt is actually the responsibility of Chinese companies. Well, the thing is, there is a silver lining, but there is also a significant negative side. And that is that all this international expansion needs money, and, well, a great deal of it. And while much of the debt has financed the expansion of Chinese companies, they have also paid, well, for this kind of nonsense.
Throughout China, there are hundreds of cities that have almost everything one needs for a modern urban lifestyle. High-rise apartment complexes, developed waterfronts, skyscrapers, and even public art. Everything, that is, except one major factor: people.
So you can get an idea of the size of all that has been built in China in the last few years. Pay attention to the following number. In just 3 years, China has used more concrete than the United States used in the entire 20th century. And as I said, everything, absolutely everything, has been paid for with debt. So now we come to a really important question. What the hell has happened in this country to cause it to get into quite so much debt?
The Chinese government's forward flight.
For the last few decades, if you could say that Chinese people were good at one thing, well, it would be saving money. This is especially true of the oldest Chinese citizens. They work and they save, and, well, that is pretty much all they do. So thanks to all of that effort, China has high investment rates. But don't be fooled. What has happened in the last few years has nothing to do with this. In order to know what has happened, we need to go back to 2008. At that time, all developed countries were going through a major financial crisis, and you can probably imagine how this affected China's exports, which are the engine that keeps driving China forward. The truth is that at that time, the Chinese government was terrified that the country would be affected by the international crisis, so in order to prevent it, they came up with an idea. The economic system had to be transformed, and they had to bet on domestic demand. And when it comes from the mouth of a politician, that domestic demand thing almost always means they are planning to start overspending. And, well, that's exactly what Beijing did.
In 2008, the Chinese government started a colossal program of extra public spending of 4 trillion yuan, about $600 billion, meant to be used for building all kinds of infrastructure: high-speed trains, underground trains, highways, houses, offices, etc.
But they went further than that. The Chinese government thought that government overspending wasn't enough, so they had to encourage the companies to do the same. So the question was, how could they do that? Well, they decided to use a traditional remedy.
In 2008, China also started one of the most expansive monetary policies ever known. The authorities lowered interest rates and banks gave money loans to everyone who asked for them. They practically established an open bar of cheap loans.
In 3 years, the price of housing was an average of 2.4 times more expensive. So an apartment which cost $100,000 3 years before would now be worth $240,000. And what was the result of all of this? Well, companies started to make all kinds of investments. They built ghost towns, bought out companies all over the world, and engaged in all kinds of projects. They took on whatever crazy risky projects they felt like. After all, the central bank was pretty much giving money away.
Overproduction in key industries is damaging both China's economic sustainability and foreign trade relations.
Obviously, many of these projects have never been profitable, so the companies can't give the money back. So what did they do then? Well, they simply asked for new loans to pay back the old ones, and the snowball kept rolling and getting bigger and bigger. And this is how the Chinese economy became addicted to debt. And now I've probably got an idea of what you're thinking. Stupid private companies, right? Well, not exactly.
More than half of the bank debt in China consists of loans from state-owned banks to state-owned enterprises.
And wait just a second, because there is so much more.
Chinese banks, a weapon of mass destruction.
We've already seen how China is currently going through a debt overdose. But as if this wasn't enough, there is another danger hiding in the bushes: a bank in the shadows. Banks face certain limitations on the amount of money they can loan, but Chinese banks have managed to skip these controls, and in a way, these banks have just copied what American banks were doing with their mortgages. Let me explain. Instead of just giving loans, they set up off-balance companies that issued the debt that the banks then bought. And these, surprise, surprise, when you look at the bank's accounts, are not listed as loans, but rather as other investments. It's actually a pretty smart workaround, right? Well, it is estimated that Chinese banks have hidden more than $2 trillion, and it has a straightforward consequence. Chinese banks can be way less solvent than their official numbers might indicate. And besides, much of this debt is opaque, so the actual Chinese debt could be much, much higher.
The fast spread of off-balance activities and bank investment actually means a risk of hidden loans which could threaten China's financial security. Shang Fulin, ex-president of China's Banking Regulatory Commission.
And wait, because there's more.
A growing number of non-bank financial firms also market their own wealth management products and invest the money with little disclosure of where the money goes.
That's right, in the last few years, those companies which get money from people to make investments that are risky and opaque have become more and more popular. And, well, why is that? Well, it's obviously because they're going to get higher rates of return with those investments. The thing is that this craving for loans has caused quite a bit of indigestion. This is a risk that the government has admitted, and it has tried to limit company loans. But since there are a lot of unsold ghost towns, empty houses, and bankrupt real estate agencies, the government has told the banks in the last few years to give away loans as if there was no tomorrow because, well, the family debt level is still so low.
The Fed economists note that China's mortgage loans increased by 35% in 2016.
And now, dear viewer, you might be beginning to see why some analysts are warning that if they don't stop this debt vortex, China could become a new Japan, a country that has been in crisis since the 1980s. And there is still more, because now we know why Xi Jinping and China need globalization quite so much. Their companies need foreign markets to deal with all of the debt that they have issued. But not everything is all doom and gloom, and the future, well, it's still to come. In China, the savings rates are still high enough for foreign capital to arrive in the country. But there is a risk, and Moody's has given the first warning. Now it's the time for the government to start working to make reforms. And now, well, we'd love to know your thoughts. You can tell us what you think in this survey, as well as in the comments below this video. What do you think will happen in China? Do you think that stagnation will turn it into a new Japan? Or do you think there'll be new reforms which will open China even more to the West? Well, I do really hope that you enjoyed that video, and if you did, please do hit that like button, and don't forget to subscribe if you haven't already. Brand new videos are uploaded every Monday and every Thursday. And do not forget to check out our friends at the Reconsider Media podcast. They provided the vocals in this episode that are not mine. And as always, I'll see you in the next video.